Guys, if you're a self-employed borrower, you went to the bank, you gave them your tax returns, they said you didn't qualify for a loan to purchase real estate or potentially refinance existing real estate you already own, you want another option, this video is for you. If you're self-employed, you have significant cash flow rolling through the business, but your tax returns don't work. This video is for you. As I mentioned, we're going to take a look at cash flow for the business, which is a really good indicator of how much money the business makes. This comes out of our 11 different loans video that we did, our webinar for some self-employed investors. If you want to watch that, click on the link, which will be provided on the screen. It's a much longer version. We're going to do this one in less than 10 minutes and cover 3 particular programs. General things that you want to know if you're a self-employed borrower: you need to own your business for 2 years or longer. We want business stability there. We want to show that you've been in the business a while and the business is going to continue. Income typically needs to be verified in some manner. Usually we use tax returns for Fannie Mae and Freddie Mac. This particular video is going to show you a different way. We do have a no income verifier loan for self-employed borrowers. If that's you, give me a call. We're not going to chat about it in this particular video, but we can talk about it and see if it works for your specific situation. If you're purchasing property, the down payment does need to be verified. We want to know the down payment comes from you. Credit and credit scores are important. We want you to know that you do pay your bills on time. Like, that's an indicator that you're going to continue to make your mortgage payment on time. Credit scores are very accurate in predicting that, so we take a look at those. And reserves are important. Reserves are extra cash that you have in the business that you're not using for the down payment and closing costs to purchase the home. Whether it's an owner-occupied or a non-owner-occupied, we're likely going to want you to have some extra cash in a reserve account, some liquid asset. Can be a checking account, can be a money market, can even be a retirement account. We just want to know you have some extra assets available. As I mentioned, this particular video is coming out of the 11 ways to verify income. We're going to take a look at 3 here. The first one is 12 to 24 months of bank statements. Bank statements are a really good indicator of a cash flow, of course, that a business has. We can use business or personal bank statements. If you use your personal bank statements, remember we're going to get a minimum of 12 months. That's the most recent 12 months. Or 24 months. If it shows even greater income, we can potentially do that. If it's personal, we'll use 100% of those deposits. We will not typically use transfers. So if you have funds sitting in your savings account, you move those over to your business account or your personal account, and we can see that's a transfer. We know that's not income, so we won't use that as part of the qualifying income. If it's your business, we're going to use 50% of the deposits. We think that there's, generally speaking, a 50% expense factor. So if you run $10,000 a month through your business bank statement, we'll use 50% of that, or $5,000 a month for the qualifying income for the loan. If you think your expense factor is lower than that, you can get a CPA letter, and if they say the expense factor for the business is 30%, then we'll use 70% of the gross deposits going through in that particular example. If you have multiple businesses, we can team up those and use multiple business bank statements as well. And what's nice about this program is if you're the borrower that's self-employed, you have a co-borrower with you that has W-2 wage earner income. We can take the W-2 income, add it to the bank statement income, and put those two together and qualify you that way for the purchase. But let's say 12 months doesn't work for you, but the last 2 months have been gangbusters, and your profit and loss over the last 12 months has been really good. Not necessarily over the last tax year 12 months, the most recent 12 months have been really good. This program is for you. So the profit and loss, as I mentioned, is the most recent 12 months of history, which could be very different than the most recent tax year. The deposits into the business bank account that we're going to see from the bank statements need to be greater than or equal to 85% of the gross income that's reflected on the profit and loss statement that you provide to us. And you can provide additional bank statements if that shows a better trend on the business income. So we'll get more than 2 months if that helps out as well. Lastly, I love this program. You can potentially give us 2 or up to 6 months of bank statements and get a CPA letter that just talks about the gross revenue to the business. It doesn't have to talk about the net income, does not have to show expenses or anything like that. We look at the gross income for the business in this one. The gross income is the number which is at the top line of the Schedule C if you file a Schedule C. If you're a self-employed borrower that has an S-Corp, we'll still use the gross income at the top of the S-Corp tax return and use that. The CPA letter is going to state how much of the business you own, how much total gross income for the most recent tax year. So that's important to know that. This particular one does focus on the tax year, but it only wants to know what the gross income to the business was. We want to know that the CPA filed your tax return. You can use the last 2 months of bank statements. We'll take a look at the deposits going through there. Once again, transfers typically don't work. We want the regular deposits to go through to be equal to or greater than 85% of the gross income, which is reflected on the CPA letter. And if the tax return that the CPA talks about is not the last year's, but the previous year's, we can potentially do that, but you're going to give us 6 months of bank statements in that case. And if you have multiple companies, we can do that with multiple companies with a different CPA letter for each company. A very flexible program that looks at the gross income for the business. So as I mentioned, that's it. Less than 10 minutes, 3 different ways there. You can use your cash flow as evidenced by bank statements with a supplement of a CPA letter to help out, qualify for a loan to purchase real estate, owner-occupied or non-owner-occupied. Depending on credit score, guys, the rates vary, the down payment varies. Give me a call at my phone number. We'll be happy to chat about your situation, let you know what might work for you. Thanks so much. Talk to you on the next video.